A new report from River Financial proves that institutions and ETFs are buying up all of your Bitcoin. If you are an individual who's been self-custodying, you are on track to become the minority. This week on Bitcoin Season 2 Writer's Room.
Everyone is a digital serf now. You will own all of your Bitcoin in a BlackRock custodied ETF, and you will be happy.
That's true. You'll be very happy. And if you're wondering what we're talking about, this is Bitcoin Season 2 Writer's Room. This is where Charlie and Colin talk about what's happening this particular season of Bitcoin. We play the screenwriters. We highly editorialize our opinions and takes on things happening. If you're not aware, the landscape of Bitcoin research, there's always some report coming out. But this past week or two, we saw River Financial, one of the most respected like Bitcoin custodian, like private client services companies, drop a report. They're known for their research on the Lightning Network in particular, but they just put out a report called Bitcoin Adoption Report 2025. And Colin and I are going to talk about that. But before we get into it, I want to say a special thanks to our sponsor, Arch Network. We'll hear about them later on in the show.
So this report's really timely. And as Charlie said, River's a big Bitcoin financial company, a really great exchange. They put out some really interesting research. And this one was timely because Bitcoin is getting absolutely dunked on this week in the context of broader markets getting hit pretty hard by a lot of uncertainty with regards to potential tariffs from the Trump administration and general worries about the state of the economy in general. The Atlanta Federal Reserve came out this week and revised Q1 GDP for the US down to negative 1.5%. That's pretty crazy. We're not going to talk about what exactly that means in the context of the broader economy, but River's report really does highlight some interesting trends from Bitcoin in the last couple of years that could tell us a little bit about where we might be in the current bull market. So a lot of people are sitting here wondering, is it over? We don't know. We can't divine that, but we can look at some data.
Yeah. So for context, we're recording this on Friday, the 28th of February. This will go out within the week. So as always, the price of Bitcoin and the current narrative of what's going on can change any day now. But we're going to kick it off with one page from this report. Actually, we're going to jump about a quarter of the way in. And I think this is a really interesting page. And for our listeners, we'll describe it to you. For the visual people, you can see this is jumping right into the report. This is a slide titled "A Dramatic Shift in Bitcoin Accumulation Occurred in 2024." And what are we seeing, Colin?
We are seeing that funds and ETFs have hoovered up 519,000 Bitcoin over the course of 2024. Businesses, largely Strategy, formerly MicroStrategy, have vacuumed up 374,000. Governments have sold 62,000. Other, which includes change in Bitcoin to be mined, Bitcoin held, and smart contracts and estimated Bitcoin lost as 306,000. And individuals minus 525,000. So a few things to note here. Stop selling your Bitcoin to BlackRock, please.
Yeah, don't give your Bitcoin to BlackRock.
And also one thing I would add here is that the individuals section is, I wouldn't call it misleading, because what they're looking at here is they're looking at on-chain data for individual holders based on UTXOs, coins held in wallets that belong to smaller accounts, right? I would add that with the ETFs, obviously this is not BlackRock, Vanguard, Grayscale, etc., just holding all the Bitcoin for themselves. Those are ETF shares held by individuals themselves, right? But they are not custodied in the way that we usually think about custodying Bitcoin, whether it be through an exchange or a trusted custodian or self-custody of coins in a cold wallet or a hot wallet accordingly. So two things that this shows is that the current bull market has been driven almost exclusively by institutions. Retail, if they are here, they are piling into these ETFs and these other funds, and they are not purchasing Bitcoin in the ways that they have in the past. And in fact, they've been selling Bitcoin while the funds have been scooping them up.
Yeah. And it's really kind of poetically displayed here on this slide. Again, for the listener, the increase in number of Bitcoin that funds and ETFs have had in the past year is almost perfectly equal to the decrease in the number of Bitcoin they attribute to individuals. So while this again is kind of estimation, it does tell the story, which we've been talking about on this show, which is that the institutions are buying your Bitcoin and that the average person is probably not electing to use Bitcoin in a more sovereign way. Now, again, free to do it as they wish, but like, is this trend to be concerning? I mean, obviously, the Bitcoin's going to grow up and it's going to be more financialized, but this has some implications. We can talk about those as we hit other slides.
Yeah, it definitely does have implications. One last thing to say on this before we move on to some of the other findings in the report. It indicates that Bitcoin's investor profile is shifting, right? I mean, the ETFs and the funds that are cited here are opening up the institutional spigot for people who never would have invested in Bitcoin before. The example I always give is my father-in-law, who loved the man, great man, but he's very much trusting of institutions, right? So when he saw that the ETFs were approved, he goes, oh, this is like a seal of approval, which is diametrically opposed and perfectly foils the kind of traditional Bitcoin cypherpunk view of we don't want the institutions, we don't need them. Bitcoin is FU money and freedom money for the internet, right? And the last thing I'll say too, it shouldn't necessarily be surprising that individuals have curtailed their holdings of Bitcoin according to this. Bitcoin runs up to 100K. Old adopters, as much as they say hoorah about Bitcoin, they're going to cash that Bitcoin out to improve their lives, right? They're going to buy houses, they're going to buy things, they're going to pay down debt. They are going to increase their cash position so that maybe potentially they can deploy that elsewhere. Not everyone is comfortable with holding 99.9% of their net worth in Bitcoin and never liquidating, right? The whole Michael Saylor never sell your Bitcoin thing is just completely unmoored from reality and kind of a midwit bell curve take on how you should manage your finances, right?
Yeah, I mean, you brought up Michael Saylor. So here again, this is a quick slide. This is a slide on businesses and their accumulation of Bitcoin, which has been like the narrative this year. As you can see from the chart for the listener, you've got a chart which shows the number of Bitcoin held between private companies, public companies, miners, and then as its own category, MicroStrategy. And this past year, we saw basically the total amount go from low 500,000 to about 900,000 total Bitcoin held amongst those different groups, and it increased by like 40 or 50%. So again, a lot of that is MicroStrategy. That's the strategy play. This is the narrative. We don't have to beat this dead horse anymore for you. You already know this. The question is, will this continue?
You know that old adage, if you're not a liberal when you're young, you have no soul. If you're not a conservative when you're older, you have no brain. This is like the reverse of that for me. It's like if you're an early Bitcoiner and you see MicroStrategy buying up Bitcoin, you have no brain. If you're happy about MicroStrategy owning almost 500,000 Bitcoin, you have no soul. I mean, there's something about this chart. Every time I see MicroStrategy's holdings, there's just like a kind of slimy feeling I get, and it makes me feel bad. I tweeted about this in December of last year and said, if you think MicroStrategy owning nearly 2% of the Bitcoin outstanding supply is a good thing, it's not. And then a lot of people jumped on me. It's like, it's a free market. They can do whatever I want. And I'm not saying that we should like fork Bitcoin so that MicroStrategy's holdings are nullified, right? But I do think that there's something to be said here about like, what's the point of this whole thing if Bitcoin just becomes this method for a company to revive itself and become relevant again by just buying a crap ton of it and playing these financial games with convertible notes.
It is a play. It's working. It's smart. It's rational. It is the game. It's like the optimal game theory for like that particular actor in the market. It's and it's working. And I think maybe like my petition is like, okay, listener, what now? What do you think Bitcoin is? Because it is an asset. It is this super hard, turbocharged battery money, whatever words you assign to it. But but at the same time, like, I don't hear the word sovereignty and freedom and permissionless in that. And those are things that Satoshi and Bitcoiners all throughout time immemorial have said. Let me tell you about one of the most slept on opportunities in crypto. Arch is building fast, composable DeFi apps on Bitcoin. Arch apps tap into the OG blockchain with by far the most liquidity and best brand in crypto. I've known the team for over a year. The tech they're building is solid, and they are racing towards mainnet. There's dexes like Saturn, meme coins on funkybit.fun, instant loans on Cha-Ching, and so much more. Plus, they're rewarding testnet users, so join me in trying out Arch while it's still early.
Go to piggyback on some of what you said there, and we've said this before on Bitcoin Season 2. Bitcoin's really kind of having an inward-looking moment, or the community is, as we reach the point of where we are like no longer in the early adopter phase, and we're transitioning to the next stage of Bitcoin's life. In the same way that the internet early on was populated by hobbyists and people who were really technically inclined and believed in the internet's revolutionary power for freeing up information, exchanging information, all that other stuff. It eventually evolved into a very convenient tool that normal people and people who did not have technical aptitude could use to bring efficiencies into their everyday lives. Bitcoin is the same thing for finance. I don't think that as it continues to become adopted, we can expect the average user to have the same kind of basement dwelling autistic focus on Bitcoin as a means to disintermediate the money printer from the state, right? And to create a fairer form of value. I think that most people will look at Bitcoin as, what can it do to just make me not poor? Like, what can it do to make me keep up in the rat race, right? And that's what we're seeing with a lot of the hoorah financialization stuff, like with MicroStrategy and things like that. In terms of Bitcoin's adoption and the arc of it, you have this difference in the community between people who think that nation state adoption is good, and maybe a more nuanced take is that it's inevitable and it's a net neutral thing. You have people saying we should not cheer this on, right? And so we're looking at this claim from River that 18 nation states estimated to own Bitcoin. We'll go through some of them right now. Direct purchases, El Salvador, 6K Bitcoin. State-backed mining, which is really interesting. Bhutan holds 11.6K Bitcoin that it has earned through its joint venture with BitDeer.
Yeah.
They have mining farms on hydro assets in Bhutan, little tiny country next to China. And they are also, they think that there are other state-backed mining mining ventures that may be generating Bitcoin for the states. It's unclear whether or not they're holding them, and that's in Argentina, Brazil, Ethiopia, Iran, Oman, and Russia. Now we move on to seizures from authorities in these countries. Oh, wait. Yep. Stay there. The United States holds roughly 200K Bitcoin. A note on that.
The United States in a firm first place from like largely just one seizure.
Largely from the Silk Road. We covered the release of Ross Ulbricht on a few episodes back. United Kingdom, 61K Bitcoin. China, 15K Bitcoin. Venezuela, 240 Bitcoin. Finland, 60 Bitcoin. And then there are a few others, indirect exposure via government investments. The UAE obviously has Bitcoin in its sovereign wealth fund through Bitcoin ETFs, so that's not held directly. And there are a few others, including hacking/theft from North Korea, estimated at 778 Bitcoin. North Korea back in the news in the Lazarus Group because of the Bybit hack a week ago, where $1.2 billion worth of Ethereum was stolen, the largest hack in crypto history. And something that's just completely been shrugged off because we're just used to big dollar sign amounts at this point, I guess.
Yeah, it's kind of like the U.S. printing like $2 trillion, and we're like, oh yeah, I guess another trillion, we can throw that in the pile.
Yeah, exactly.
I'm imagining like 2008 financial crisis, Charlie, my head exploding at that number.
100%. Speaking of looking at numbers that make your head spin, the almost 200K Bitcoin that the U.S. holds. People talking about, does Fort Knox have the gold? U.S. Marshal Service says, hold my beer, because the U.S. Marshal Service said last week they can't say how much crypto it holds, which throws a wrench in Trump's campaign promise to purportedly create a strategic Bitcoin reserve with the Bitcoin that the U.S. holds. Basically, he would issue an executive order saying we just won't sell them. Not exactly the plan that you might want to see as a Bitcoiner. You'd rather have the United States, if you want them to have a strategic Bitcoin reserve, have an act of Congress to push that through. But this is amazing because there are kind of two reads that you can tie into mainstream politics with this. Either this proves that what Doge is doing is a good thing because the government is so inefficient that it can't account for, like, the easiest asset to account for in existence. Or it says, wait, Doge, don't fire all those government employees because they're already messing up with the resources that they have. So can we really afford to fire more of them? The other read on this too, much like Fort Knox, right, where people are saying we don't have the gold because the U.S. government has already sold it. This money could have been fraudulently embezzled. It could have been used to pay other things. That's just me speculating. But, we know in the Silk Road case that some of the agents involved in seizing that Bitcoin embezzled it. So God only knows what happened with this Bitcoin as it's been held for over 10 years at this point.
Yeah, maybe it grows old or decays or something. I don't know. I'm just kidding. Bitcoin can't do that. Okay. I think let's throw some hopium into the fire. Let's fan the flames of hopium, and let's make a bull case, because we know the people love it. The people love it when you tell them that they're early and you zoom really far out. And here's a great chart. I do like that River does this. I think this is really helpful for a lot of people to pull back from the price and look just at where do you sit along the global path to global adoption for this asset, for this technology. And River says Bitcoin adoption is just beginning. They say that the total addressable market of Bitcoins is not even 1% of its total addressable market. And that we are maybe at a 3% adoption for Bitcoin. Now, they are making assumptions that they know the full scope of what Bitcoin could be in total market cap, but I think this is, again, pretty fair. And it's given the prevailing understanding of what Bitcoin is as money makes sense. But you, listener, or viewer, this is that classic S-curve chart of the adoption of a technology. And we see Bitcoin is yet to even cross that first ramp up into that quick rapid adoption phase. So you're still in the early days. I feel a bit like I'm resurrecting the 2019, 2018 early maxi talking points. But this still remains true, where Bitcoin adoption and proliferation is still pretty meager. And we have a long way to go if Bitcoin is to continue to be adopted for all the cases that us Bitcoiners think it should be.
Yeah, and they compare it to Bitcoin in 2025, they compare it to online banking in 1996, social media in 2005, and the internet in 1990 in terms of adoption curve. Maybe at the risk of contradicting my own analogy of Bitcoin and the internet, because I do think it's fair in the sense of if you look at Bitcoin was born on and of the internet. It's very much a technological advancement, and its earliest adopters were the same types of people that you would expect to be running their own email servers in their houses in the 1990s, right? That being said, I think that when people make these adoption path charts, I think there's a huge assumption here, especially if we use another analogy with Bitcoin that's often thrown around as Bitcoin is digital gold. The internet has been widely adopted because it leads to efficiency gains in almost every aspect of commerce and everyday life. And so it's very easy for people to see why this is useful for them. And they're going to use it for anything from booking plane tickets to hailing a cab to ordering dinner to purchasing something online to sending emails to loved ones. Literally, the use cases are almost infinite. Bitcoin, it's not as easy to explain why it's valuable to people, or even I think to project out a 100% adoption curve. Because if you look at again, going back to gold, for instance, if we want to use those two things as very closely analogous, what's gold's adoption rate? How many people own gold as a financial instrument? No one uses it for payments. Obviously, that's an argument in favor of Bitcoin as digital gold because it's a better gold for the digital age in terms of scarcity and your ability to divide it and transact with it. I guess I'm just a little bit skeptical at this point, unless you're looking at this from the Bitcoin is eventually going to be the world's reserve currency, which is what a lot of Bitcoiners believe. The jury's still out on that in my mind. I don't think it needs to do that to succeed. It's do we ever get a 100% adoption rate? Or even 50%? I don't know. Whatever long enough time
in history, has a single monetary medium been the like the exclusive, totally proliferated adoption rate. And yeah, so hard time claiming that, but at the same time, like this is an argument where we can't like arrive at a conclusion until, we all live for the next 50 years and see it play out, and we can be like, oh, okay, it did subsume all of the M1 or the M2 and for these things. But I think we all agree that we're still very early. I want to go on to do we want to go to the lightning section? Because I think this is
Let's
one where
do M2 to put a bow on that, because that kind of goes back to the lead into the show about where we are in the adoption cycle, or where we are in the market cycle currently. I think that M2 money supply is one of the more important charts for understanding Bitcoin's market dynamics and how it relates to macroeconomic factors, right? So M2 money supply is a measure of money in the United States that includes cash, checking deposits, and other convertible deposits. So it's a indicator that looks at like the broad money supply and how much liquidity there is out there, right? So as you can see at the bottom of this chart, for those of you who are in video, if you're listening on audio, I'll try to explain it the best I can. Global M2 money supply, an increase in it usually precipitates bull markets, which makes sense, right? This is the same thing that leads to runs in equity markets and other increases in assets, right? As more liquidity is pumped into the system, it lubricates financial markets. That liquidity chases assets, and the assets appreciate accordingly. In 2017 and 2018, we see a bump in M2. We see a bump in Bitcoin's price. Same thing in 2020 and 2021. The current bull market, though, has not seen the same rate of M2 increase. And yet Bitcoin has hit a new all-time high and transcended $100,000. So if you can scroll down, Charlie, this run has been furnished almost exclusively with the adoption of spot Bitcoin ETFs and these institutions buying up Bitcoin to furnish interest in those ETFs, right? So people were buying these ETFs, people were allocating their IRAs and things like that to these ETFs. And we've seen a total of institutional investors and non-institutional investors pour in $99.7 billion into these ETFs as of the publishing of this report. There have been like 3.3 billion outflows, I think, this week. But you have almost $100 billion worth of value locked into these ETFs currently. So that goes back to what we were saying earlier. Is like, whereas before Bitcoin's bull runs have been almost entirely retail, or at least retail in the sense of like you didn't have all of this institutional adoption. It's hard to call whales pouring in hundreds of millions of dollars into Bitcoin in international markets retail, but in the sense of like, in speaking from a specifically US context, there have been very few institutional avenues to purchase Bitcoin. Now we're seeing that become more of a important factor in Bitcoin's price. And going back to like where we are in the current cycle, this is people's questions right now, right? Bitcoin hit $81,000 this week. That's a far cry off of its all-time high of 109,000 that it hit, I think, a month or two ago. And so people were wondering, is the cycle already over? Bitcoin's had drawdowns anywhere from 10% to 50% during bull runs. Usually you would expect to see drawdowns be a little muted as Bitcoin becomes more adopted because there's more liquidity out there. It's still a relatively small market compared to other financial assets. But I think the important thing to note here is that all of this increase, the meteoric increase to Bitcoin from 2024 to now has been driven by these ETFs and has been driven by institutional adoption largely. We have not seen retail get involved very much. And also M2 has not impacted it. This has happened without an increase in the M2 money supply. So, or I should say without a substantial increase to the M2. So I think there's an argument to be made that people always talk about super cycles in Bitcoin, but there's an argument to be made that perhaps, especially if we get a recession, Bitcoin could have a pretty lackluster 2025, but we might see appreciation in the coming years if there is a recession as the Fed prints money to shore up the economy, and then Bitcoin's off to the races again as we enter a more inflationary environment. Not saying that's going to happen. This is not financial advice, but I do think that we should expect, unless like we live in a simulation and or God just loves playing tricks on us, that the 4-year cycle shouldn't really exist. This has been a perennial question with Bitcoiners. Does Bitcoin tick to a 4-year cycle according to the halvings? Maybe it does, and I'm just an idiot, and maybe this is like the mid-curve meme, right? But I don't see why that would happen unless There's just market psychology that wills it to be so. But there's nothing about the halvings that can guarantee buy pressure or sell pressure. If enough people want to sell Bitcoin,
I know everyone. I know we spend a lot of time saying that issuance doesn't like immediately affect how things play out. But my mental model is that for the first couple decades of Bitcoin, during the primary issuance of the asset of the token of Bitcoin, the 4-year cycles do dominate. But once you reach like 99% issuance of Bitcoin, then halvings don't really matter as much. They become more muted. I think we're probably entering into an era where Bitcoin will be cyclical, but it won't look the same as before.
I hope it does change. And a part of me like wishes that maybe it doesn't, because it's really crazy to think that in the 2017 bull run and in the 2021 bull run, all you had to do was buy at the beginning of those years. And then, or in all you had to do is buy in 2026 or 2020 and 2020. And then you just had to sell in November and December and walk away. I mean, that the fact that the cycle has been so on point, again, makes me think like God's just kind of up there laughing at us, or we do live in a simulation or something like that. So anyway, that's kind of the last macro point there. This is unlike any other bull market we've seen, though, I think it's safe to say, given that information that we just digested.
Yeah, let's get into something different. So if you're still here and you're tired of us yammering about macro, well, you're good. We've reached about as far as we can go on macro. We're going to talk about Lightning, which I think is really always the meat of the River report. They put last year, I think 2023, late 2023, early 24, they put together a kind of like the definitive report on Lightning in Bitcoin.
The best data we've ever seen on it, honestly.
Yeah.
And shout out to the River team and their research head, Sam Waters. Go follow him on Twitter and go check out their prior research if you're interested in it, because it's super good data.
Yeah. And I think one of the things about Lightning is that for the listener who's not really familiar with this, like you can't just go like look at a block explorer like you can with Bitcoin. You can't just go tell what's happening with Lightning. You have to go to all the Lightning nodes and you have to like monitor them, or they have to tell you what they're doing. And so that's kind of what River's done. They've taken it upon themselves. They were early. They were one of the first companies to really lean into Lightning. They've kind of led the way. They reach out to a lot of the other Lightning like node providers, and they develop a system and heuristic for getting data from those nodes and then evaluating what their real activity is on Lightning. And so we can get a pretty good idea. But again, this is not comprehensive. This requires a lot of inference from them. But this is the best inference that I'm aware of.
They have one of the largest Lightning capacities of any company or any entity in Bitcoin. And I think maybe before we hop into this, Charlie, it's helpful to take a step back and explain the Lightning Network to people who might not understand it. So
yeah, it's not a blockchain for the listener. It's not a blockchain. All the other like layer 2s on Ethereum and stuff, they're all kind of like blockchains. Lightning is not a blockchain. It's a system. It's a system of channels.
It's a system of accounting that is off chain for Bitcoin, and it relies on a few cryptographic tricks that we're not going to get into the weeds of, but just explain the basic structure. Two parties, Charlie and I, for instance, would deposit Bitcoin into a multi-sig address that we both hold keys to. And then we would exchange Bitcoin off-chain through this address, or we would exchange Bitcoin off-chain through the Lightning Network and basically update the account balance. So if we deposit 1 Bitcoin, I send Charlie we deposit half a Bitcoin each. I send Charlie 0.1 Bitcoin. Charlie now in the updated accounting for that channel owns 0.6. I own 0.4. Now, the reason why I'm explaining it that way is because there's two things that are crucial to understand Lightning Network. Is it relies on bidirectional channels. You can only open an account with one party for a channel. And if you want to send Bitcoin to another party that you're not connected to, if that party is connected to it, then you route it through them. So it's a really complex kind of web of all of these channels that are connected to each other. So if you want to get Bitcoin to someone that you're not connected to, you can route it through the network, but you have to find a path for that. The second thing is all of this Bitcoin, all of the changing of hands is happening off chain. It's kind of like a bar tab, right? You go out of the bar, you say, I'm going to open a tab, and you give them your credit card. You don't actually settle that tab until you close out what you bought, right? So, and that's the same thing with a Lightning channel. Charlie and I are updating the account balance off chain, but it does not actually reflect on chain on Bitcoin's main blockchain until you close the account. Last point about that and all the channels. Again, the channels are bi-directional. The more people using Lightning and the more people who are connected to other parties, the healthier the Lightning network is. Because again, you can't just be like, I'm going to send money to River without having a channel open with them, right? But maybe Charlie has a channel open with them. So I'm going to send money to Charlie first. And then through Charlie's channel with River, he sends money to River that reflects the money that I was sending him. It's kind of complicated, but the point is Lightning is incredibly complex in a kind of ingenious yet clunky way to solve this scaling problem for Bitcoin. And Lightning's liquidity has improved a lot with a lot of these exchanges opening up channels. And the majority of the activity we see on the Lightning network comes from some of these big liquidity providers, exchanges. We call them Lightning service providers, right?
I've not done an explainer of the Lightning network on this podcast. So I feel like we should.
If this were 2018 and 2019, we probably would. But
yeah,
I think this is this is the first time we're covering Lightning, not because we hate Lightning. I love Lightning. I think it's super cool.
Just because everybody else covers it all the time.
Well, everyone else has covered it all the time, but also the hype around it was super strong when it launched. And I think it was 2017 or maybe it was 2018 when it was like finally when the first beta was launched. And there was a lot of hype around it as saying there were these criticisms of Bitcoin of, you can't scale throughput on the main chain. It's slow. Blocks are 10 minutes. Lightning was the first solution that went to market that said, look, Bitcoin can be used for payments. But because of the bi-directional nature of the channels that I just mentioned, if you want to use it to pay for coffee, you have to have a channel open with that coffee shop, right? It's very complicated, and the adoption of it has been much slower than people in certain camps would have liked.
Yeah, and again, I will say that the creator of the Lightning Network, Taj Dryja, himself has said things to the effect of the idea that the Lightning Network is for the last mile payments for all users is probably not feasible. And for a while there, if you're new to Bitcoin in the past 2 or 3 years, for a while there, that was the official agreed upon thing from all Bitcoiners that Lightning will solve all these things. Now, Lightning is really cool and it's growing. So let's go back to this. We can see here that the number of exchanges by total volume inched over 50% of all exchanges in the past year. And you now got with the addition of Binance and Coinbase and other large ones like KuCoin, HTX, and BitTurk. You now have over half of all exchanges by gross revenue
trading volume
support Lightning. Yeah, trading volume. And then we also can see that the architecture on the network is also growing. You can see we measure amount of Bitcoin locked into the network in entirety has remained roughly flat the past 2 years. But the US dollar value has increased because obviously Bitcoin's gone up. And we can also see that they're similar to Bitcoin nodes. There are Lightning nodes, which you can reach publicly. There are obviously some that are not reachable publicly, but we can see that the number of nodes has been roughly flat. And the number of channels between the nodes, this is interesting, has declined since 22.
That doesn't surprise me in as much as I think that. So 2 things to note here. It is a little damning that the capacity in Bitcoin terms basically hasn't moved since 2023. I think that speaks to what we were talking about just now, that the hype and some of the excitement for Lightning has really dampened over the last few years. Going back to the channels dropping as the nodes have fallen 19% from peak, channels dropped 35% accordingly. We would expect channels to drop if nodes drop, but also as more financial services companies and Lightning service providers adopt Lightning, we would expect the number of channels to go down. Because going back to the topology for the Lightning Network, if you have a bunch of mega exchanges and Lightning service providers opening up channels between each other, you don't need as many direct channels between users, because then you can find more reliable routes for payments that you wouldn't have been able to do beforehand. This goes back to the institutional adoption of Bitcoin too. It's like these trends, unfortunately, depending on who you ask, or fortunately, because it is still adoption, a lot of the activity on Bitcoin is being concentrated in central points. And some people will say, well, this proves that it's failing because Bitcoin's supposed to disintermediate centralized control, right? But there's also another argument to be made that companies are adopting this technology and users can use it. And you still have the option to use Lightning in a sovereign way if you want to.
And users are just really not choosing to use it very much.
That's true.
And that's the thing.
Because it's cumbersome. It's, like this kind of fantasy that like everyone's going to open up a Lightning channel with their like local butcher and other things. Like none of this is the I don't know if you're listening to this, if you've ever tried to actually run your own Lightning node, it is a pain in the ass unless you really know what you're doing. And I've talked to guys who have like during the last bear market and bull market, they got super into Lightning and they were like balancing their own channels and they were opening up channels with everyone and they were trying to extract fees from routing payments. And like the incredible thing was, I talked to this one guy, he had channels open up with all these Lightning service providers. And the way Lightning works is you can force close a channel at any point without telling the counterparty. It's kind of like, gentleman's rules that you should tell them so that they can get their ducks in a row before you do that. But this one guy was running all these channels and he got his channel force closed. And because the on-chain fees were so high at the time, all of his routing fees were obliterated from having to pay the on-chain fee for closing that channel. And so for those who might be lost of what I was saying there, remember, Lightning channels have to be reconciled on-chain eventually. This is another problem. If you close them when fees are high, you are basically paying a premium on closing that channel than where if they were low, right? So this is another problem too. It's like you were probably going to close the channel. Depending on what fees are going on at that time, you're actually not getting the same transaction fee savings that you think that you're getting.
Yeah. And so the report then says, okay, so, Lightning hasn't really taken off quite in the past couple of years. It's stalled a little bit. In my own subjective experience, I've observed some stalling in like developer enthusiasm. I've actually talked about this on the show. But River does say, okay, so here's some like near-term Lightning growth catalysts. And the big one is stablecoins, which I'm like,
as always,
I guess so. It's true. I mean, Tether just recently, a couple months ago, came back from El Salvador. They're going to build a skyscraper in El Salvador that looks like friggin' Orthanc or something. And they're also going to put stablecoins on Taproot assets, which is a particular, fungible standard that you could put on top of Lightning. And so, yeah, I guess you can do stablecoins over Lightning, and that is a potential growth catalyst. And, I don't know, Colin, that just doesn't like get me that excited.
Doesn't get your jimmies rustled. Well, it does get your jimmies rustled, but doesn't get your jimmies off, so to speak.
I don't actually feel, some other folks like get super angry at stablecoins. I'm kind of like, yeah, well, they're a thing that happens. And it just doesn't, I don't really feel
the most useful application for blockchains are dollars.
Exactly. I mean, imagine saying that in 2025, and that is a mainstream. In fact, I would argue that is one of the most, even people like me admit that is one of the current dominant use cases.
This is the problem with Bitcoin is like we were talking before we did the show about Bitcoin is kind of this center of objectivity, right? In the sense that the blocks are cryptographically linked. You can use them as reference points for who owns what, or even as we've seen with ordinals, anchor some sort of metadata onto it and say that this proves provenance of something. It does serve as an anchor for objectivity, but at the same time, I've always kind of had this goofy, maybe thesis about Bitcoin being perfect postmodern money, because depending on who you ask, it can be anything. It can be a savings account. Yeah. It can be money to buy drugs on the internet. It can be a way to circumvent the state's view of your finances. It can be a way to escape the traditional financial ecosystem. It can be a vessel for trading JPEGs, on and on and on. And that's the crypto ecosystem too, in a nutshell. A lot of Bitcoin maximalists think that you're wrong for using stablecoins and you're extending dollar dominance and you're a bad person for doing that. And I don't know, man, like if you're someone living in Argentina and the peso just inflated 100% month over month, save me the grandstanding. They just want a financial tool like USDT that will not erode their purchasing power. And you can say that they should hold Bitcoin instead, and that would be better for them. Well, try telling them that when they bought Bitcoin in, November 2021, and then it got cut in half, right? Yeah. So
yeah,
everyone tries to ascribe more like that. I think that's a dangerous thing for a lot of Bitcoiners and crypto people. They moralize the assets, and these are tools to use in your everyday life, right? Like, this is where a lot of the infighting comes between Ethereum and Bitcoiners purity testing each other. Don't moralize the asset. Don't judge another person's use of it because you have no idea where they're coming from.
Hey, this is Will with Blockspace Media. And I don't know if you heard, but we just announced the second edition of our conference series, OpNext, now to be held at the MicroStrategy HQ in Tysons, Virginia.
That's right. After the success of our first scaling conference at Fidelity last fall, we're doing it again this spring, April 11th and 12th at the MicroStrategy HQ. I'm really excited for the programming. We have various stakeholders, industry, developers, and Bitcoin miners present.
So join us in April for open, neutral, and honest conversation about the leading proposals and technical solutions that will scale Bitcoin to the next billion users. No booths, no tokens, no shills, just Bitcoin and honest conversation.
You can find tickets and more information at opnext.dev or click below in the show notes.
I'm glad you said, because we can now lead into the last topic that we're going to touch on, which is actually one of the first pages in the report, page 5, the Bitcoin protocol potential upgrades. And if you want to talk about Bitcoiners arguing, this is the page to go to. We put out 3 categories. We're going to categorize each of these things as maybe focusing on an area for programmability, scaling, and or security. So they list things like L-enhanced, the great script restoration, derived chains, opcat, the quantum resistant qubit, transaction introspection. And so the thing is, like, it's actually, at first blush, I was like, this is actually really, I really like this. This is a very simple explanation. But then I ran it by, I didn't think too much about it. I ran this page by some of my more developer insightful friends, and they were very critical of it. And when I see their criticisms, it seems so obvious to me. And
what were some of the critics? Was it the way that they bucketed each thing? Because one of my criticisms initially is, I don't understand the security heuristic here, because you could make an argument that opCTV and opcat, which would enable certain types of covenants, increase Bitcoin security, right? If you're using CTV,
you could say,
theoretically,
I think you could say qubit, like a quantum resistant soft fork, would be a security focused upgrade.
Yeah, I mean, that makes total sense.
But then it begins to break down, because scaling and programmability are not very mutually exclusive. In fact, one might argue that they're kind of synonymous, because you are basically allowing transactions and UTXOs to do different things, and that is a way to scale. And so I would say pretty much everything on here, which is marked as scaling, is probably also equally programmable. And you can see there are some also hilarious oversights, which do indicate like the failure of the page. For example, you have this great script restoration, which is categorized as just scaling. And then you have down here opcat, a single opcode, which is categorized as programmability and scaling.
Is a part of
opcat is a subset of the great script restoration.
Yeah.
And so that's a really
good point. And Can I zoom in on something you just mentioned too?
Yeah.
And I want to go back to opcheck, template, verify, because I think this is one that could have all three.
Yeah.
Because to your point about the programmability and scalability argument, the reason why opctv would improve Bitcoin's programmability, at least as I understand it, and correct me if I'm wrong, Charlie, I'll probably get some developers going, actually, after I say this, but
if the developers are still around after we talk macro for 20 minutes, then they're
going to be like,
they're going to be criticizing this. We welcome your
criticism. Lane. Most people probably think that when listening to me talk, but with CTV, it would allow you to control where you spend your Bitcoin and put restrictions on that, right? Or sorry, I should say put restrictions on where it's spent. So you could create a CTV covenant that says, I only want my Bitcoin I only want these UTXOs, the coins associated with these UTXOs, to be sent to this wallet in the future. That to me is a programmability bump. And that's also a security bump, I would argue too, because you can create covenants that protect your coins from theft. So I don't really understand.
Go to the website utxos.org and look at the use cases tab and tell me that those don't look like things which are programmable, like systems and use cases that you could do. I had lunch with the author of CTV yesterday, and he was explaining to me an interesting design where you could trade discrete log contracts on sub 10-second intervals on Lightning if we had CTV. You could basically do like an interesting type of like poly market on Lightning. Now that's very programmable to me.
And discrete log contracts are a form of like on-chain financial contracts in Bitcoin.
Yeah,
people use them for loans.
I almost think that.
Like that.
Yeah, I almost think that like this categorization of programmability is a little bit of a branding thing. I think that's actually probably what's affecting this, is that some of the proponents like Udi Wertheimer and some of the Taproot Wizards messaging has been explicitly around opcat enables things like AMMs on Bitcoin.
Yeah.
And I would say that is something you could clearly put in the programmability category. But I think this is more of just a marketing interpretation than anything. So I really appreciate the attempt to visually define this. But this is we're going to have to get a better V2 of this. And
maybe it would also help for them to define their terms a little bit better.
Yeah.
I'm not really sure what reducing technical debt is supposed to mean in the context of security.
And I'll also say one more thing, which is like, this just demonstrates how difficult it is to explain these things, because it's really difficult to categorize them. We talked about it when we talked about the developer chart for signaling support for each of these, a couple months ago. And like, it's very difficult to categorize these. It's difficult to like put them into a box, because you can almost think of them almost more like each one is like a tool, and the tools can do different things. And when you combine the tools to do different things, you can build a house. You could build a house with a hammer, maybe. You might need a wrench, but like you can think of these like they're not these like singular like actions that you can take, and it's really buried in nuance. And this is why the whole soft fork discussion is so difficult. It is just very difficult to communicate this outside the developer circle. And it's actually often we saw this past week, some prominent developers still have fundamental misunderstandings of how covenants work. If you've been online and looking at Twitter. And so it's kind of interesting, like that we wrap up with this page, which I really, really like. I almost want to like, for you and me, Colin, maybe someday to try to like do our own like TLDR one pager on all of the proposals.
I think that would be great.
Yeah.
We could do, and we could have our own, kind of grading scale for them according to what they do, right? I want to pull on the house thread really quickly, and then we can hop off.
Yeah.
I think that's a really good analogy for explaining why soft forks and upgrading Bitcoin is so difficult, because two things here, and I'm going to try to present this as succinctly as possible. The reason why Bitcoin is so hard to upgrade in the first is because it's not like another It's not like a tech company, where you have a few decision makers saying, this is what we're doing for the next iOS update, right? Or this is what we're pushing for Windows, whatever. It is a completely disintermediated process where you have a few people who are really smart, who have good ideas and bad ideas, but very few people can evaluate those good ideas and bad ideas except the other smart people. So they're kind of cloistered in their own chat rooms and they're passing around concepts. This has gotten a little bit better as Bitcoin has become more adopted in the sense that you have more voices weighing in on things. But it has become worse in the sense that as you add more voices, it becomes much harder to find consensus on what people find useful. The second part of this is in terms of what people find useful. Some people might want to put solar panels on their home because they think that's very useful and they can draw power from it and it helps them do all these other things. Other people would rather put in a pizza oven and a deck in their backyard. Other people might want to build a pool. It's really hard for people to look at, here's what we are going to use to upgrade this system. Let's all agree on what is best to upgrade the system, because people are going to have their own subjective notions of what is considered valuable or what they want to spend their time on and resources on. This becomes infinitely more difficult when you're not building a pool, but you're like installing a chemistry lab in your basement or something that no one understands how to use, right? Like that's the analogy I think that's kind of tortured in my, but the idea
we're arguing over it's the optimal way to decant some obscure thing, and everyone else is just kind of upstairs trying to cook a meal, and all the scientists are down below arguing over the obscure things about your science experiment.
Yeah, exactly. Like what is actually useful to developers and what is easy, or I should say what developers find useful is not always what users would find useful. And it's often hard to translate how these upgrades would end up impacting Bitcoin from a user's perspective, right? I mean, I think this was a problem with Taproot, where a lot of the benefits of Taproot have not been obvious to users of Bitcoin because they are very obscure and or mired in technical complexity that users can't appreciate. I think covenants, strangely enough, they've been stonewalled, but the actual benefits to users are pretty easy to explain.
Yeah, that's the thing about covenants. It's they're actually pretty simple to explain. Pretty simple to explain a couple different types of covenants, and it's actually it's pretty clear that users do want those things, and a wide swath, different types of users want them.
But I think that's a wrap.
That's a wrap. I do think that's a wrap. If again, this is Writer's Room, Charlie and Colin, Bitcoin Season 2. If you have a subject that you want us to talk about, hit us in the DMs at BTCSZN2 on Twitter, or DM or tag Colin or I just in public, in the wild, and we can maybe chime in. He is As I Lay Hodling, and I am CB Spears. Otherwise, Colin, I'll see you soon.